Some families want more flexibility with their childcare situation and more involvement with their childcare provider. That's why they may choose to hire a license-exempt childcare provider. License-exempt childcare providers are those who are not required to be licensed by the state of California. When hiring an in-home caregiver, you, as the employer, are not exempt from local and state employment laws. It's important to be aware of these laws and comply with them to avoid penalties and other issues as you focus on safe care for your children. This resource covers what you need to know about hiring and paying an in-home child care provider. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. The Trustline Registry was created by the California Legislature in 1987 and signed into law by Governor George Deukmejian. Trustline is administered by the California Department of Social Services and the nonprofit California Child Care Resource and Referral Network. To learn more about Trustline, visit their website at www.trustline.org. To learn more about the California Child Care Resource and Referral Network, visit their website at www.rrnetwork.org. This resource will focus on the license-exempt child care providers that you hire to work in your home, such as a private nanny or someone in a similar role. These are the most common examples of a license-exempt provider, but there are others. In California, this category also includes a provider who cares only for their relatives, a provider who only cares for the children of only one other family other than their own, certain cooperative or co-op agreements formed by parents to share child care responsibilities, certain public recreation programs, and certain before and after school programs run by schools. In California, the basic test for determining whether you have hired a contractor or an employee is whether you, as the employer, have the right to control the manner and means by which the work is performed. In general, if the employer can instruct and or supervise the worker, and if the worker can quit or be discharged at any time, they should be classified as an employee and not a contractor. As an employer, you have responsibilities. You must withhold income taxes, Social Security, and Medicare from wages paid. As we will discuss, it's also important to provide them guidance and supervision, set clear expectations up front, and clearly communicate the systems and structure you expect them to follow. This information will help set the hired in-home caregiver up for success and is one of the key factors in determining their status as an employee and not a contractor. As the IRS explains, household workers are your employees if you can control not only the work they do, but also how they do it. And clearly, the level of direction you need to provide for the care of your children falls into an employer-employee relationship. Worker misclassification is serious business. It is considered a form of tax evasion, and classifying an employee as an independent contractor in order to avoid taxes is a felony that can result in up to 5 years in prison and $100,000 in fines. The IRS does have a form, SS-8, that can be filed by either an employee or an employer to determine a worker's status. The form asks for details on the behavioral and financial control, services provided, and relationship of employer and employee, and more. The IRS will send a letter when the review is complete, which can take up to 6 months. When determining how much to pay your in-home child care professional, it's important to remember that they are a professional and deserve to be compensated as such. That means you should be paying them a living wage and be prepared to pay taxes on their employment and offer them benefits. When deciding how much to pay your hired caregiver, the first thing to consider is minimum wage in your area. In California, the minimum wage statewide is $15.50 per hour in 2023. but many cities and counties have set minimum wage rates that are higher than the state. Be sure to look up rates in your area. Minimum wage is important, but it's not the only factor to consider when determining how much to pay your hired caregiver, since it may not actually be a living wage. The difference between the minimum and a living wage can be significant. You also should consider the typical pay rates for in-home childcare providers in your area. Even if you pay a living wage, it needs to be competitive with other jobs in your community to attract the nanny you want. Other factors to consider when determining how much to pay your hired in-home caregiver are years of experience, relevant education or degrees, licenses and certifications, the number of children in their care and their ages, and additional responsibilities or household tasks that they will be regularly asked to do. You may be considering paying your hired in-home caregiver that does not live with you a yearly salary, rather than an hourly rate. Keep in mind, however, that the Fair Labor Standards Act says that domestic workers are entitled to overtime pay based on their hourly rate. So, you can set an annual salary for your caregiver, but doing so does not make them exempt from overtime pay. You will have to calculate their hourly rate and use that as the basis for any overtime they work. The Fair Labor Standards Act requires you to pay your caregiver 1.5 times their hourly rate for any hours they work beyond 40 hours a week. In California, the laws go further. You are required to pay caregivers 1.5 times their hourly rate for any hours beyond 45 in a week and any hours beyond 9 in one day. California also has a paid sick leave law, which requires that you, as a household employer, provide up to 48 hours of paid sick leave per year, with 1 hour accrued for every 30 hours worked. You can limit usage of sick time to 24 hours per year. Some localities throughout the state have their own rules regarding sick time, so be sure to look up the regulations in your area. In the state of California, you are required to share state employment posters with your employees and must provide a written notice of wages when they are hired. Your household employee must sign 2 copies of this notice, one for their records and one for yours. You are not required to provide your in-home employee with a written contract detailing the terms of their employment, but doing so is strongly suggested. You are required to provide your household employee with a change in relationship notice if they are fired or laid off, and you are required to keep wage records on file for at least 3 years. It may be tempting to pay your hired in-home caregiver under the table, which means paying them entirely off the record, likely in cash and without withholding any taxes and without reporting them to the state or federal government. However, this could mean big trouble for both of you, as paying your employees under the table for the purpose of tax evasion is illegal. It can lead to significant penalties for you and can hurt your employee, as they won't have a record of income if they need to apply for a credit card, a lease, or a mortgage. They also won't be eligible for unemployment benefits if the need arises. Before you can withhold and pay taxes, you need federal and state tax ID numbers. You can apply for a Federal Employee Identification Number, or EIN, from the IRS and then use that number to register with the California Employment Development Department, where you will receive a state identification number. You'll also need to register your new employee with the state of California within 20 days of hiring them. Your hired in-home caregiver will need to fill out an I-9, a federal W-4 form, and an employee's withholding allowance certificate for the Employee Development Department for the state of California. If you pay cash wages of $2,600 or more to any one household employee, you are responsible for Social Security and Medicare taxes equal to 15.3% of the employee's wages. As the employer, your share is 7.65%, and the employee's share is 7.65%. You can choose to pay your employee's share of these taxes, but if you opt not to, you are required to withhold 6.2% of your employee's pay for Social Security and 1.45% for Medicare taxes. You are not required to withhold federal income taxes from wages paid to a household employee, but you can do so if the employee requests it. In addition, you are likely responsible for paying federal unemployment taxes, which is 6% of the first $7,000 in wages paid to your household employee. California has its own requirements for household employers too. Household employers who pay more than $750 in wages in a quarter are required to withhold state disability insurance from their employees' pay. If you pay $1,000 or more in a quarter, you are also required to pay unemployment insurance and the employment training tax. California does not require household employers to withhold personal income tax, but you must report personal income tax wages for any hired in-home caregivers. You will need to supply your hired in-home caregiver with a Form W-2 by the end of January every year for their income tax purposes. It summarizes the total wages and taxes paid over the course of the previous year. And you'll need to use Schedule H, Form 1040, to determine the household employment taxes that you'll need to add to your own income tax return. If you have a babysitter you use occasionally for a date night here and there, they likely have other clients, are working independently or with little direction, and have other characteristics that would make them a contractor and not an employee. If you pay the babysitter more than $600 in a year, you'll want to issue a 1099 NEC, which is a tax form used in the United States to report payments made to independent contractors or freelancers. The acronym NEC stands for Non-Employee Compensation. The forms can be filled out online before January 31st of the following year. Then a copy is filed with the IRS. To complete the 1099 NEC, you'll need the babysitter's name, address, and Social Security number, or TIN, as well as the amount you paid. Your babysitter should report all of their revenue, even if it is under the limit for a 1099 NEC. However, if their total babysitting revenue is less than $400, they need not report it on a tax return nor pay self-employment tax on it. If you pay your babysitter more than $2,300 in a year or are using them on a regular ongoing basis, they are considered a household employee and you are required to pay Social Security and Medicare taxes, as well as possibly federal and state unemployment taxes. In these cases, you should review our guidance on household employees. However, there are exceptions to this rule for babysitters who are under age 18. When paying your hired in-home caregiver, you should provide a pay stub that clearly states your employee's hourly rate, the number of hours worked in the pay period, gross wages, deductions taken, and net pay. One of the easiest ways to do this is to use a payroll service. Payroll services can manage, organize, and automate payments to employees in businesses of all sizes, even businesses that may have just one employee, like a household. Payroll services or software can automate the entire process of hiring and paying an employee and providing them with all of the documents they need to keep both of you in good standing with the IRS. If you want to use a payroll service, look for one that offers automatic payroll processing, tax withholding, flexible pay options such as options for paper checks or direct deposit, federal and state compliance and document submission, and the ability to track time worked. If you do decide to use a payroll service, make sure your hired in-home caregiver knows exactly how it works, especially if they will be using it to track their time and when and how they will be paid. The state of California requires household employers to provide several benefits to their licensed exempt child care providers. If your family's nanny or babysitter is asked to drive their own vehicle, you must provide a mileage reimbursement of 65.5 cents per mile in 2023. Similarly, If they use their cell phone on the job, you should offer a reimbursement with regulations requiring a reasonable percentage, even if the employee's monthly bill does not increase from use at work. Besides those benefits required for household employees by the state of California, there are other optional benefits that you can consider offering. Perks like these show your employee that you value and respect them, their hard work, and their care of your family. Moreover, offering them as an employer makes you more attractive in the current competitive market. Two significant benefits that employees appreciate are support with health insurance and retirement. One option for health coverage is to make contributions toward your employees' healthcare costs, such as their insurance premiums or copays. You can do this by creating individual coverage health reimbursement arrangements, an account-based plan that allows you to provide non-taxed reimbursements to employees who are enrolled in their own health insurance plan. If you decide to offer this, you must offer it to all employees who qualify. There is no minimum or maximum contribution limit for employers. Another option is to purchase a health insurance plan through the Small Business Health Options program. These plans are offered through private insurance companies, and you can decide whether to offer your employees one plan or a choice of plans, whether to offer medical, dental, or both, and how much of your employees' premiums to pay. Contributing to your hired in-home caregiver's retirement plan is another well-received benefit. The easiest way to do this is to set up a simplified employee pension plan or a simple IRA. The SEP is an easy-to-implement, inexpensive retirement plan where you can contribute up to 25% of employees' salary per year. All contributions are by employers, so your employee cannot use it for their savings. A simple IRA allows both employer and employee contributions. Employees can make contributions directly from their payroll up to $15,500 in 2023. Contributions are pre-tax, so they don't pay tax now, but they will when they withdraw the funds. Employers must choose to match either 2% of an employee's salary, regardless of whether they save any money themselves, or a 1-to-1 match between 1% and 3% of an employee's salary, where you only contribute as the employee contributes. In terms of other benefits that will further distinguish you from other families hiring caregivers, consider options outside the box, like paid holidays, birthdays, offering one Friday off a month, an education or professional development reimbursement, or even adding them to your gym membership. In-home, license-exempt childcare is a great option for many families who want the flexibility it offers. Hiring an in-home caregiver can be complicated, though, as you are hiring an employee who you will have to manage and pay both fairly and legally. Taking the time to hire and pay this employee properly is a great way to create a relationship that starts off strong and thrives over time. For additional resources to support your family and your childcare provider, explore the Trustline website at trustline.org or the California Child Care Resource and Referral Network at rrnetwork.org or at mychildcareplan.org. On behalf of Trustline and Civitas Strategies, thank you for watching.